Good afternoon. I'm Jennifer Tim. I am a real estate wealth advisor licensed in both California and in Oregon. And I am with Keller Williams. And today I am back after a month of being out to support family, focus on family due to a death in the family. But honored to be back with our regularly scheduled midweek market brief for coastal Southern California. And we're going to get started straight away. There's definitely some things that we need to stay on top of. So, of course, this is our midweek market brief, coastal Southern California, July 22nd. 2026, and this is where smart money watches the market, starting with our national outlook. Housing market is rebalancing. It is definitely not retreating. So national home prices are up 1.1% year over year, showing continued appreciation despite affordability challenges. Only 23% of the nation's largest housing markets are experiencing annual price declines, down from 37% a year ago, signaling that the broad-based market softening is easing. Inventory continues to improve, giving buyers more choices, which reduces the intensity of bidding wars in many markets. And mortgage rates remain in the mid-6 range as cooling inflation is offset by geopolitical uncertainty and higher oil prices. Seller concessions are becoming more common, with nearly 46% of transactions including concessions, creating opportunities for buyers to negotiate closing costs and interest rate buy-downs, which are very popular. Pending home sales fell 5.4% in June, reflecting affordability challenges created by those elevated mortgage rates rather than a lack of buyer interest. Housing starts jumped 19%. But the increase was driven primarily by multifamily construction. Single-family construction remains relatively flat, meaning inventory constraints for detached homes are likely to persist. Senior housing wealth reached a record 14.9 trillion, highlighting the tremendous amount of equity available to many homeowners for retirement, estate planning, downsizing, or wealth transfer. And of course, that is an area that we specialize in. So what happened with mortgage rates today? So the headline, mortgage rates inch up to an 11-month high. Definitely not what we want to see. So the commentary from Mortgage News Daily, we have bad news and slightly less bad news. Starting with the latter, today's mortgage rates are only marginally higher than they were yesterday, with an average top-tier 30-year fixed rate up 0.02%. The bad news is that this takes our rate index to 6.77%, the highest level since July 28th of 2025. So mortgage rates are driven by the bond market, and bonds remain under pressure from a renewed surge in fuel prices, specifically higher fuel prices and additional uncertainty about the Iran war, increase inflation expectations, and it's inflation that is the actual thorn in the bond market side. Last week's inflation reports definitely offered some solace, but the bond market has progressively come to terms with the fact that last week's data was for the month of June, the best month for lower fuel prices since the start of the Iran war. July has been the polar opposite, with gas futures quickly jumping back up to their highest levels of the year as of this morning. Our smart money insight at the national level, today's market is shifting from speed to strategy. While higher mortgage rates have slowed those transaction volumes, home values do remain remarkably resilient, inventory is gradually normalizing, and negotiating power is improving for buyers. At the same time, record home owner equity and growing seller flexibility are creating opportunities that didn't exist just a few years ago. Smart money isn't waiting for perfect conditions. It's leveraging today's market by negotiating concessions, evaluating equity performance, and making long-term real estate decisions that build generational wealth instead of trying to time interest rates. And a question for you is, when last did a real estate agent offer to do an annual property review to really give you an idea of how your property is performing in today's market. I can actually do that for any property basically across the country at a very high level and at a very detailed level in Oregon and in California. So if that's something that you would like to take advantage of, please don't hesitate to reach out. Moving on to our local market spotlight, Capistrano Beach, sitting at a slight seller's advantage of 36. Median list price, as you can see, is up. Price per square foot is up. Our inventory is only up to 22 homes, and median days on market is up to 63. So the smart money inside Capistrano Beach is showing renewed momentum. The MAI is rising, inventory remains extremely limited, and the overall price trend is moving higher. At the same time, 41% of listings have reduced their price, which suggests that buyers may still find negotiating opportunities, especially amongst homes that have been on the market longer or were initially priced too aggressively. So your smart money move, focus on well-located coastal properties where scarcity supports long-term value, but use days on market and recent price adjustments to negotiate from a position of strength. Dana Point is at a market action index of 41, which is down slightly, and you can read all those numbers for yourselves. Dana Point remains firmly in the seller territory with a rising MAI. Generally, it is down slightly since the last time, but it's kind of, really depends on the properties that are coming on. And relatively low inventory. So although the market narrative points to some recent cooling, pricing has not yet weakened materially. The lower rate of price reductions compared with neighboring coastal markets suggests sellers are maintaining more leverage, particularly for desirable homes in the lower and middle luxury segments. So your smart money move, buyers should act decisively on high quality properties, while sellers can still benefit from disciplined pricing. In a market this selective, condition, location, and presentation will matter more than simply listing at a premium. San Clemente is our strong sellers market with an MAI of 45. Smart Money Insight, San Clemente remains the strongest sellers market of the 4 cities, even though activity has cooled slightly and inventory has increased. The lower price segment is moving much faster than the upper end, with homes near the entry level showing the shortest market times and strongest absorption. This points to continued demand for more attainable coastal housing. Smart Money move up buyers may have the best opportunity when selling into strength and purchasing in a slower luxury segment. The gap between market tiers can create favorable timing for repositioning equity. And finally, San Juan Capistrano with a market action index of 41. San Juan Capistrano continues to favor sellers, but the increase in inventory and decline in the market action index suggests buyers are gaining slightly more breathing room. Demand is strongest in the lower price segment, while higher end properties are taking longer to sell. That creates a more segmented market where pricing and property type are especially important. Your smart money move, buyers seeking larger homes, lots of long-term lifestyle value, may find better negotiating opportunities in the upper tiers, while sellers in the entry and mid-range segments can still benefit from strong demand. And watch your feed for the other areas that we cover. So for our global perspective, a month ago, which was the last time that I hosted our Midweek Market Brief, we were talking about lessons from the World Cup, the FIFA World Cup. Well, congratulations to Spain. Those of us who follow soccer are kind of, dealing with withdrawal symptoms. But in the meantime, the Tour de France, the greatest cycle race on the planet, is in its 3rd and final week. So I thought I would take some lessons from the Tour de France and apply them to real estate. So the Tour de France is not won with one burst of speed. It's won through endurance, strategy, teamwork, adaptability, and consistent performance over time. And by the way, if you have never watched a stage or a couple of stages, I would really encourage you to watch a couple of stages. Watch the highlights. The coverage is 4-5 hours a day, which most of us don't have time for, and Pacific Standard Time starts at 3 o'clock, 3:30 in the morning. So we sort of watch and fast forward and catch the amazing stories as they develop. But it really is an amazing thing to witness. And a lot of the principles and the lessons from Tour de France are the same principles that apply to building generational wealth through real estate. It's definitely a marathon, not a sprint. The tour unfolds across multiple stages, 3 weeks. They only have 2 rest days during that time, and no rider wins the race on the first day. They may get the yellow jersey on the first day and have the fastest time, but it's definitely over time. And real estate wealth is built the same way. Small gains compound over time. Equity grows through patience. Long-term planning matters more than short-term headlines, for sure. And one difficult market cycle does not define the outcome, just like one difficult day in the tour may not, depending on whether you're a general classification rider or not, does not define the outcome. The power of the peloton. So the peloton is basically the whole group when they cycle together. So cyclists conserve energy and improve performance by riding together in the peloton. Successful families also benefit from a strong advisory team of a real estate wealth advisor. Imagine that. An estate planning attorney, CPA, financial advisor, lender, and a trust professional. No one builds a lasting legacy alone. And that's what we strive to do, is to earn a seat at your table together with the rest of your team to help you achieve your goal of building wealth through real estate. Every stage requires a different strategy. So the tour includes mountain climbs, flat stages, time trials, and unpredictable weather. And boy, they have had it all. Yesterday was a time trial, for example, an individual time trial. Unpredictable weather. They have had temperatures which have been, in the 90s and the 100 degrees when they're cycling 100 and something, kilometers, or it's really been strange. And real estate plans must also adapt as life and markets change. So different stages may call for buying, selling, downsizing, refinancing, completing a 1031 exchange, eliminating rental burdens, repositioning equity, and preparing property for the next generation. The yellow jersey is earned cumulatively. So the yellow jersey is for whoever's in the lead. Overall, that's the person that earns the yellow jersey. Currently, that is Tadej Pogačar, arguably the greatest cyclist ever to ride in the Tour de France. He is unbelievable. So the yellow jersey reflects the overall performance, not simply a one-stage victory. Wealth building works the same way. So long-term success comes from purchasing quality assets, paying down debt, protecting equity, improving cash flow, reducing unnecessary taxes, and making thoughtful decisions year after year. And of course, to do that, you just have to have a team of experts to assist you. So your real estate plan is your race strategy. So the tour teams study the route. They anticipate obstacles, they assign roles, and they prepare for every stage. Honestly, the logistics of putting on the tour are, I think it's easier to do a real estate plan than it is to be one of the team managements, one of those people really making sure that they have enough water bottles and bicycles and trainers and, you name it, they have a full support team. Families also need a clear plan for building wealth, protecting their assets, reducing family conflict, predetermining inheritance, transferring real estate efficiently, and creating a legacy that lasts beyond one generation. And again, if you think about the tour, those teams, they go so far as to make sure that the riders have their favorite mattress and they have a truck that loads up they have not volunteers, they have members, staff members who are loading up those mattresses every day. And then when the athletes get to their hotel that evening, because rest is everything when you are doing a 3-week race, they want to make sure that those athletes can sleep comfortably, because it's all about the recovery when they're sleeping. So they have their mattresses, and they take their mattresses and their pillows and their, oh my gosh, it is phenomenal to see what goes into the logistics for the Tour de France. And just like that, that's what you have to do. You've got to have a plan to make sure that you are achieving your goals. I think it's a great analogy. So our global perspective lessons from Tour de France Smart Money Insight, the goal is not to win one stage. The goal is to complete the entire journey with a strategy that protects your position and moves your family forward. The most successful real estate decisions are really based on perfect timing. They are based on preparation, discipline, expert guidance, and the ability to adapt when conditions change. So build your team. Know your route or your route, and stay focused on the long game. Because as we believe, your legacy begins with a real estate plan, which of course we are here to assist you with. So wealth building insight. This week, I thought we would just do a little summary of the 21st Century Road to Housing Act, which has now become law, and what it means for wealth building. So the first point is more housing supply equals more opportunity. So the new law is designed to increase housing inventory by encouraging new construction, manufactured housing, office to residential conversions, and rehabilitation of older homes. More supply can create additional buying opportunities over time. That's really important. More affordable entry points for future buyers. By supporting the development of more entry-level housing, the legislation aims to make home ownership more attainable for first-time buyers, helping more families begin building equity through real estate. Revitalizing existing neighborhoods. The law includes grants and forgivable loans to renovate aging homes, encouraging neighborhood revitalization, and preserving housing stock rather than relying solely on new construction. Encouraging smarter land use. The legislation incentivizes states and local governments to modernize zoning and land use policies, potentially creating more townhomes, duplexes, and missing middle housing in communities where supply has been limited. It limits large institutional investors. A first-of-its-kind provision limits investors owning more than 350 single-family homes from purchasing additional properties, with the goal of preserving more opportunities for owner-occupants. Now, we've looked at those numbers before, and that is really a small percentage. The majority of our investors are mom and pops with 1 to maybe 5 properties that they own. Long-term impact. This is not an overnight fix. So housing experts emphasize that implementation will take years. So, hold your horses. This is definitely going to take some time. And while the law is an important step towards improving affordability, it does not immediately lower mortgage rates or eliminate today's housing shortage. And we've already covered what is influencing today's mortgage rates and why we have a housing shortage. And so that will continue for a while. So our wealth building smart money insight. The greatest wealth building tool isn't waiting for the perfect market. It's owning appreciating assets over time. This legislation recognizes that increasing housing supply is essential for long-term affordability, and it won't create immediate relief, but it lays that groundwork for more home ownership opportunities, stronger communities, and greater access to the wealth building benefits of real estate. So families who already own real estate are in a unique position to use today's equity to help the next generation through thoughtful planning, strategic investments, co-ownership opportunities, or legacy-focused real estate strategies. Real estate has long been one of the most powerful ways to build, protect, and transfer generational wealth. And that's why we believe that your legacy begins with a real estate plan. The families that create generational wealth aren't just buying real estate, they're truly creating a roadmap for future generations to own it. So, if anything in today's brief sparked questions, inspired a next step, we'd love to connect. Just reach out. This is honestly, we are here to help you unlock the wealth that you might have in your real estate and help you to achieve the goals that you have for your family. This is what we strive to do every single day. If that means buying and selling real estate, of course, that's what we're here to do. I mean, consider me your real estate agent with superpowers. We are definitely here to help you. And our final disclaimer, our material is provided for general information purposes only, should never be construed as investment, tax, or legal advice. We do obtain the information from very credible sources, but we don't, it's provided without warranty, guarantee of its accuracy, completeness, or results from using the information. And you should always consult your own legal, financial, or tax advisor. That's why, consider us your support team, just like all those athletes in the Tour de France have a huge support team to help them achieve the best outcomes for them. So thank you so much for being here today, and I look forward to being back with you next week at the same time.